I'm Dan Fitzpatrick at RealMoney.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just writing down the tickers you see on TV every night and punching the buy button the next morning. I can help you know when to buy these 3 stocks I saw on TV. Today, let's look at LinkedIn, Bank of America, and Apple. On Friday, LinkedIn announced some pretty solid earnings, and it really surprised the heck out of the market. Stock closed up almost 18%. So what's the trade on LinkedIn? Okay, a couple things. First of all, here's your short-term resistance here, the prior high at in October. What's that, about 95 bucks or so? Fine. Stock has already ramped up quite a bit. That's really your upside, I'd say about $5 from current levels before you'd at least expect the stock to slow down. So I don't see this as a buy right now. I'd rather wait to buy it at 96 bucks than buy it now, because at least I know at 96 bucks all this resistance has been cleared away and the stock's free to move higher from there. Bottom line is this. LinkedIn has gone from a sell rallies to buy dips stock. You can see the 50-day moving averages moving up. Be patient with this thing. If this is your deal, at least give yourself an opportunity to make money on the stock. Don't chase a stock that's up 20% in a day. Instead, let all that buying frenzy wear itself out and then wait for a pullback before you take the stock. Now, Bank of America has given us a little different take here. 200-day moving averages, where this stock is struggling with. If you own the stock here at $8, look, you're still going to make money. It just depends on what your time frame is. You can see this stock has been in a downtrend for at least a year or so, but it's coming back. So don't give up on the stock just because it's struggling at the 200-day moving average. Would I buy more right now? No, I wouldn't. Would I want to keep the stuff that I have? I am. Instead, though, wait for some kind of a pullback, or at least a closer proximity to the 20-day moving average before buying. And that can happen in one of two ways. Either the stock can pull back down to where it is presently, fine, or the 20-day moving average can continue to drift higher. The stock drifts sideways for a while and ultimately tags that. So the question is the price going to come down to it near term, or is the price going to drift over to it in more of an intermediate term? Either way, I think you just got to wait for the stock to come to a better buy point before committing more money to the stock. And last, Apple. Gotta love Apple. Not so much if you're short, but definitely if you're long. Look, this is a freight train you don't want to stand in front of. You can see here, it's an acceleration in the uptrend like we've seen a couple times before. You've seen a recent, one back here in early 2010, another one in mid to late 2010. Now we're really seeing a broad excursion away from the 200-day or 40-week moving average. Put another way, buyers are all lathered up and pushing this stock much higher. There's a lot of talk of price targets in the 600s, 700s. James Altucher has a $1,000 price target over the next 12 months. It could happen. If you're long Apple, I wouldn't just be outright selling it. I know that there's a lot of calls to do that, but the stock was supposed to trade lower on Friday. The market was crappy, wasn't it? I mean, everything was selling off on Friday. Apple traded down like $3 or something in the morning before ultimately closing flat. 25 cents it closed positive. Wow, that's a stretch if you're looking at that as a triumph or a victory. But in a way it is, because with everything else down so much, where money was going. It was coming out of all that other stuff and into Apple because there was a lot of profit taking. Look at the volume. Trading volume was pretty significant, much higher than average, but Thursday's when the volume really peaked. So if you're long the stock, why don't you trim a little bit? If you're looking to buy, I would be using any weakness as an opportunity to buy. I think ultimately this stock does hit the 20-day moving average, but my bet is that it's going to hit it in this way. The 20-day moving average, it'll just continue to climb up this way. The stock is going to meander around a little bit, probably hit it up here. My point is this: You're not going to get much give back in Apple, guys. There's just too much buying. All this buying here is not you and me buying. This is institutional buying. Big firms are taking new positions in this stock. You don't want to trade against them. You want to trade along with them. Just be patient. Wait for a better opportunity to buy before taking a bigger, more meaningful position in the stock. But do have a position in Apple. If you haven't done it already, go do it now. Get over to Real Money Pro and subscribe, okay? It's a new service. It's an awesome service. Lots of good trading ideas. Some of the best are in my articles, Fitbits. 5 charts in each article, 4 articles a week. What's that amount to? You do the math. It's about 80 charts a month. You got to be able to find a good trade in there somewhere. So get over there and check that out. Also, go over to my website, that's stockmarketmentor.com. Sign up for my email list. It's totally free, and I will send you 1 video a day with a charting idea that's designed to do 2 things. First of all, teach you how to fish for yourself. Second of all, maybe toss a fish on your hook every once in a while. Okay, I'm Dan Fitzpatrick, and I'll see you next time.